In today's video, we'll be discussing 8 changes to Social Security benefits and the tax code in 2025 that you need to know about if you're a retiree. If you're still working, a few of these do apply to you as well, including the last one, number 8, which changes every single year, but it's important to know about nonetheless. Before we dive in, if you're new here, my name is Jake Skellhorn. I'm a certified financial planner. Consider subscribing to the channel here if you want to stay up to date on future retirement-related videos like this one. The first one on the list here is the cost of living adjustment for Social Security benefits in 2025. The cost of living adjustment this year is 2.5%, meaning the average Social Security benefit will go from $1,927 to $1,976 per month. This is the lowest cost of living adjustment in 4 years, but it does reflect that inflation is cooling a little bit and going back to those pre-pandemic levels. I know it may not feel like it when you go to the grocery store, but that is what the cost of living adjustment is based off of. It's important to note that unfortunately these Social Security taxability brackets have not changed still in the last 40 years. So more of this increased income will be subject to taxes if your income is over a certain level. Number 2 on the list is the repeal of the windfall elimination provision and the government pension offset, which essentially would reduce Social Security benefits for those who worked in the private sector as well as the public sector for the government at some point in their careers. This will have a huge impact for a lot of Americans who had virtually no Social Security benefit because they do receive a government pension. This is also good news for those who are still working and not quite retired. If you weren't expecting any sort of Social Security benefit because of these provisions, this could mean that you can retire sooner or draw less from your portfolio for your desired income needs. Number 3 on the list is that Medicare Part B premiums are increasing. So in 2024, they were $174 per month. In 2025, they will be $185 per month. So this will slightly offset some of the increased Social Security benefit since those premiums are taken directly out of your Social Security payment each month. Higher income retirees also want to be mindful of IRMA surcharges, or the income-related monthly adjustment amount. I'll put the brackets on the screen for you now, but if you earn over these thresholds, there are additional premiums that you have to pay for Medicare Part B and D. Keep in mind these surcharges are based off of your income from 2 years before, so your 2023 income will determine what your 2025 Medicare surcharges are. This is one of the areas that I focus on a lot with my clients. We definitely try to plan ahead before you're taking Medicare and have options for where you can pull income from to control your tax bracket and ultimately your IRMA surcharge bracket. Number 4 on the list is state income tax changes. 9 states in 2025 are reducing their state income tax. This includes New Hampshire, which is no longer imposing a state tax on dividends and interest, which means New Hampshire joins 9 states that no longer charge any income tax at the state level. Number 5 on the list is that the standard deduction is also increasing. This typically happens every year with inflation, but for 2025 for single filers, the standard deduction is $15,000. For married couples filing jointly, it's $30,000. If you file as head of household but you're single, you get an extra $2,000. And if you're over age 65, you get an extra $1,600 per spouse that's over 65 for the year 2025. As you might have noticed, I'm using a cheat sheet of sorts that I use in my financial planning practice all the time. If you want to download a copy of this with all of these important numbers for 2025, you can do so at the link below in the description. Number 6 on the list here is regarding required minimum distributions. This year in 2025, if you're turning age 73, you now have to start taking distributions from your pre-tax retirement accounts like IRAs, 401ks, 403bs, thrift savings plans, and 457 plans. This is up from age 72 last year, and this RMD age will increase to age 75 in the year 2033. If you do have large pre-tax balances in these accounts, but you're not quite to RMD age, you may want to consider Roth conversions to pay taxes on some of that money today so that RMDs aren't a problem for you in the future. Number 7 on the list is for my partially retired folks or people that are still working. You have new contribution limits to your 401ks and other employer-sponsored retirement plans. The ordinary limit is now $23,500. The catch-up limit if you're over age 50 is $7,500. And there's a new provision this year for those who are specifically between the ages of 60 and 63. Instead of $7,500, you can contribute $11,250 extra per year to these accounts. But once you get to age 64, this catch-up amount goes back to $7,500. Don't ask me why they did it like that, but that is the IRS's rule. My understanding of this rule is that it's based off of your age on December 31st of that year. So if you're 63 now, but you're turning 64 at some point during this year, you would only be able to contribute the $7,500 and not the $11,250. Last but not least on the list here is that the ordinary income tax brackets and long-term capital gains tax brackets are being adjusted for inflation. So like I said at the beginning of this video, this happens pretty much every year to allow more of your income to be taxed at lower rates. This could be a great thing for those who are utilizing long-term capital gains to supplement their retirement income. That 0% tax bracket is now up to $96,700 if you're married filing jointly. Same thing for those doing Roth conversions. If you want to fill up those lower tax brackets while you can, it allows you to squeeze a little bit more into those this year versus 2024. Once again, the worksheet that I've referenced throughout this video is available for download for free by clicking the link in the description below. Thanks for joining. Consider subscribing to the channel, and we will see you in the next video.